friends, good week. How are you today? I hope you have had a good Easter and you enjoyed your time and your weekend with your families. And it's time to get ready for another excited forex trading week. This is the weekly review for the second week of April, 9th of April 2012. Last week ended very interesting while the job market in USA is going on the way back. It looks like. Despite of the bad news, only 120,000 new jobs added to the market, while the expectation were above 200,000. And despite of this number, it's still too early to go to panic. We saw that the US dollar suffered because of that, but the indices started their down move. We saw that many of them made beautiful bearish down move during the last Friday. The question is, what does it mean? I don't think as for now that this is the time already for QE number 3. Bernanke already said that it might be still too early. We can see that this week we are about to have many Bernanke's speech. We can see he's about to have a speech on Monday, while the market will still be on holidays. All Europe and Britain, which means the volumes are going to be very low, do not trade in this day. He's going to have a speech again on Friday, and during this time several FOMC members are about to have a speech as well. I guess they are going to talk about the QE number 3, the possibility, the probability for that. And well, we have to pay attention for their words. The last meeting they said, as for now, no QE number 3. But the last news might change their opinion, and we have to follow that. Let's take a look on the Australian and New Zealandian, for example. This is the first pair I'm going to discuss, and we have many for the upcoming week. Australian New Zealandian. Looks like the Bollinger Bands of the weekly chart begins to be broken, but we have to pay attention for something very important. We have a trend line here, as you can see. Not just that, we have also a beautiful support area just right here around 125, as you can see. Going back to the daily chart, and pay attention for the stochastic, it becomes oversold already and just in the beginning. Pay attention for the daily chart. Daily chart is almost on a duplication of the Bollinger Band. Almost on duplication of the Bollinger Band. So if you pay attention, there are several supports area that should also support the Australian New Zealand drop down. We can see the stochastic is oversold already, and we can see that if we have this down move to the support, it should be the creation of this daily possible divergence here, together with the stochastic divergence that might be created just with this area on the same and make the up move. The pair, from my point of view, should make the stop here around, make the return up, and then make most likely the continuation down move. So what I'm about to say just here, I think this is the right time to look for buy opportunities as for now for the Australian New Zealandian. I like this pair, and if you go as low as for the 4-hour chart, you can see why it looks good from my point of view. We can see that even if it goes lower for the next support, there is beautiful divergence also on the 4-hour chart, and we can see that RSI also follows this divergence, and the stochastic most likely will come to its oversold area, which means this should be good buy area for the Aussie Kiwi. How far it can go up? Well, at least to the 20 MA, or in other words, I would say back to 126.80, 127 area. It could go higher again to the 127.50. Also, I'm doubtful about that, but still this pair, from my point of view, is about to make a stop during the next days and retrace up again. Dollar yen, is that about to begin down move? Finally, we got a close below the 82. Finally, we got a daily RSI cross below 50 to gain a bearish momentum. All happened finally. And if you pay attention for the weekly chart, we have more plays to go to the 20 MA. We have much more to go. It looks like the hedge traders are looking to join below the 82. They are looking to join below the 82, which means new money should take the dollar yen down, which means the pair can go as low as to the 80 again, or even lower. Remember, it went straight above the 200 moving average and never retraced back. It could go low again. And from my point of view, as long as the dollar yen keeps below 83, it should keep lower, with 80-50 as target, then 80, then 79, and the final 78 areas as targets for the dollar yen. What about the Pacific pairs, where finally they went below the 200 moving average? What does it mean? Does it mean we can go lower? Well, the answer is definitely yes. How? Well, for that we'll have to go for the 4-hour chart and mark here some very important thing. This is the trend line we have. As long as we are below this trend line, the pair should keep lower. Any attempt to go higher, we have a trend line and we have a resistance area, right? It's a range here. As long as it is below this range, the pair should keep lower. We can go as for the 1-hour chart, look for any possible up move, look for the divergence to make a new sell. But if and when this trend line on the 4-hour chart or the daily chart will be broken, friends, get out. Get out. Until then, it should keep lower. How far? Well, 102.50 was reached. The next area should be tested by the Australian dollar will be around 101. Then the parity level. Will that happen? Only time will tell. We can pay attention that we have a line just right here, if you pay attention, right? And we have a support just right here around 102.50. Which means we are now on critical level. Because we are below the 200 moving average, it should keep lower. Will that? Only time will tell. Weekly chart just broke below 20 MA, RSI just crossed the 50, and MACD just crossed the 0. Is that enough to take the pair lower? Only time will tell, but from my point of view, this line is the most important line to follow. As long as it is below the range of the line, it should keep lower. What about the New Zealandian dollar? We discussed about the cross Australian New Zealandian, Aussie dollar and New Zealandian dollar. It is moving on a clear range. This is the clear range here around, right? We have had several attempts to go lower without any success. A break out of this range should lead for the move with the break direction. If it breaks up, we should go higher. If it breaks below, we should go lower, at least for the previous support, but also possible duplication area, which means around 080 or even below. Stay tuned for the New Zealandian dollar. What about the gold? The gold is going with these two guys. How the gold should go? Well, we have a divergence here for gold. Is that enough for a buy? Let's take a look for weekly if we have confirmations. Do we have any? No. It means that the gold still can reach this support area again. And despite this divergence, in such market conditions, I would prefer to skip and look for better opportunities on next lows if it happens. For the gold to buy, I want this beautiful commodity first of all to break above the 17-15 area. 17-15 area. It must break above it so the gold can make and gain a new rise up. Until it does not happen, I will look for new lows, or lower lows at least, to jump in and buy the gold and follow the daily divergence. What about the majors? Well, as for now, my recommendation is to stay out of the euro. It looks like it found a beautiful range and it feels comfortable around. If it will break this range below, it will open the doors for the euro dollar to go as low as below the 127 for the duplication of the range again. Is that about to happen? That's a beautiful question. That's an important question. And I think it all will be decided during April. So we have to follow this range before we make any decision. As for now, I think it's better to leave it as it is. What about the pound dollar? Fighting the 20 MA, fighting the daily 200 MA, fighting the RSI 20. No news under the sun here. Leave it. As for now, leave it. And very interesting situation is with the euro franc. We all know that the bank still wants to keep the 120. It was spiked during this week, but then immediately went up like 40 pips again. What does it mean? It looks like the bank still wants to keep this range, and there are rumors that they will push it even higher. 120 is the minimum range they want to keep, the Swiss bank. But the rumors say it's going to be 124, 125. If they will intervene again, we are about to see fast rise up, and that's why I think that as long as they keep the 120, it's good area to try and buy. That's about this pair. And a very interesting thing to watch right now from my point of view will be the indices. Indices, especially the Nasdaq, created double hammers, or a hammer and an engulfing, a small engulfing. From my point of view, during the next weeks, the Nasdaq will build something like that. From my point of view, the Nasdaq is about to go to the 20 MA of the weekly chart again, at least. Yes, it could go lower, of course, but at least that's what it will do. From my point of view, during April, that's what we should have. We have had already enough bad news from Europe and from USA with the job market the last Friday, and it should keep it lower. How to join? Well, we have here very important support area, as you can see. We have here the trend line. A break below this support area, which you can see here on the 4-hour chart. A break below this area, which is 27.15, 27.10 maybe. A break below will open the doors for the index, from my point of view, to go as low as to the trend line, which means it should go during April back to 2650 at least, but then it could go as low as below the 2600s as well. From my point of view, that's the right time for Nasdaq to go down. S&P, same story. You can see here we have a bearish, beautiful bearish trend, and if the weekly chart will break again below its resistance, very psychological 1350 area, if it will break it below again, it will open the doors for the index to go much lower, as it might be very false, very fake break above an important resistance. That's why, from my point of view, we are going down for this, and that's why I think that break below the 1350 again will open the doors for the index to go much lower. Pay attention also to this trend line from the close price through the lows. Here we are on the same area, break below, and we are moving much lower. Of course, that the same mentioned also relevant for the Dow. We can see also bearish trend here, and we can see this resistance area. It's around 12,700. Break below that will open the doors for much lower lows. But it all will be dependent, of course, on Bernanke's word about the QE number 3. If it is about to happen, it will open the doors for another bullish move. But the question is, will that happen? Will the last bad news be enough for the economy to go a step back? And for that, we will have answers once the market returns. Friends, please pay attention that this Monday is a day off for Europe and Britain, which means the volumes will be very low. Be careful on this day. Pay attention for the pairs we discussed about. The Pacifics look good, and of course the crosses we discussed. The yen pairs look good, mainly the dollar yen. And the indices look great, opportunities. And the last pair that I would recommend to get ready for that is the euro pound. The euro pound, if it breaks this area, it should go to 081 or 080 again. The thing is that on the daily chart, we can see here, right, that if it does go lower, it will create an amazing daily duplication of the Bollinger Bands, which means 081, 080 could be considered as an amazing buy opportunities. Stay tuned for that. We'll discuss about it on the next meetings here on the videos. Thank you very much for watching this video. I wish you good luck and good trading with all the opportunities we mentioned. The main opportunities, of course, are the indices, but we have many opportunities on the forex market as well, as we just discussed. I wish you a beautiful week, good trades, good trading, enjoy this one, and happy Easter once again. Thank you very much for your time. Vladimir. Bye-bye.